When we think about digitalization in banking, we tend to think about the customer interface, but there are many more ways that digitalization can add value to banks and others in the financial services sector. Hi, I'm Dorothy Hill. I'm Head of Digital and Customer Interactions at ING, and I'm here with our CEO, Steven van Rijswijk.
Hey everybody.
We're going to talk about harnessing the power of digitalization to create a differentiating customer experience and to create a strong, stable and profitable franchise. And we'll also talk about how digitalization is changing our competitive landscape. Steven, digitalization has been playing an important part of our strategy for years, but things are really accelerating with COVID-19. How do you see this playing out, and how does this impact your priorities for the future?
Yeah, thank you very much. And I think since the start of the pandemic, we've seen a significant increase in digital transactions, both through mobile card transactions, but also by only mobile clients and services. This is not a new trend, it's just a continuation and an acceleration. And as a matter of fact, what we have seen now is that in 2019, we had an increase of sixfold, 6 times the number of digital card transactions compared to the previous year. Also, if you look at that year, the number of clients that worked with us only through a mobile device increased from 26% to 37%. And 80% of all of our digital interactions is currently on the mobile. Now, because of that, we have chosen to provide a differentiating mobile customer experience because that's where the customer is. It also means that we need to adjust and simplify our products and processes to deliver a better end-to-end digital experience to customers. So that's the focus area, and not only for retail customers, by the way, but also for wholesale banking customers, because increasingly they also require innovative products, innovative services, but also a differentiated digital way of delivering, and these elements become key criteria for our wholesale clients to select a wholesale bank. And at the same point in time, we then need to deliver to our wholesale banking clients a one client experience in everywhere where we work with them. So those are the focus areas.
So it sounds easy, but we know that creating a good customer experience on digital requires a lot of hard work in the background in terms of your IT systems, in terms of optimizing your processes. So how do you approach that, and how will you be approaching this to make sure that the digital transformation at ING is a success?
Yeah. First of all, we need a couple of skills. Those are data management skills and those are analytical skills. And what we therefore need to do is we need to bring people in and we need to nurture those people to then use those skills in our organization. And why do we need those skills and why do we need these people? Because in the end, we want to understand our customers better. And if we gain those insights in the customers, we can also cater for their needs and stay relevant for them in the future as well. So that's the first step. But we also need a data infrastructure. So that's a second element that is important to have. And in ING, we then have things like cloud storage, or we use a certain way of architecture in our building blocks. We use data lakes, but we also use Esperanto. And Esperanto is a language that we are using to harmonize the language and the processes in which we use data, because then we can translate data into information we can use to help our clients. But let's not forget, it's not only about the customer experience, it's also about the experience of the employee. Because if in improving the customer experience with a digital offering, we do not hand in hand also improve the employee experience, you get that they disconnect and then the employees need to make up for the improvement in customer experience, and that is not sustainable. So that's what we need to do. Now with those two building blocks, improving the customer experience and improving the employee experience, we then can create opportunity for ourselves. And it's important because we are living currently, especially in Europe, for example, in a negative interest rate environment. So we need to improve structures both on the revenue side and on the cost side. And on the cost side, you can clearly see that a better end-to-end digital experience can make banks more efficient, and that's therefore having a benefit on the cost. On the revenue side, if you create a better CX, a better customer experience, it also gives you opportunities when you become much more personal in the contact that you have with your client, and that gives then revenue opportunities in return. And I think then last but not least, what you then see is that there's much more digital interactions, much more financial transactions, but also much more complexity. And that complexity creates risks. And those risks are, for example, in the space of cybersecurity or in money laundering. And therefore you need data analytical skills to better cater for and counter those risks. Because that's important to keep the bank safe, compliant and secure, because that's the trust element that all of us, of course, need to do business with our clients. That's the start. And then talking about safe, secure and compliant and talking about risk management, in the end, within risk management, there's a lot of model usage to make decisions. And if we have better data, better digitalization and better analytical skills, we take those better decisions and we do better business for and with our clients. So digitalization is very key for us as an organization.
And what about KYC? That's a really important topic for banks. So how is ING applying digitalization and data specifically in KYC today?
Yeah. We of course use digitalization in the tools that we have, for example, for name screening or pre-transaction screening, but also to do transaction monitoring. As an example of a tool that we use is a tool called an anti-smurfing tool, and that tool uses data to assess where we see potential criminals cutting payments in smaller pieces, i.e. smurfing them, to then try to get below the radar when doing their payments. And that tool with data and with analytical skills is detecting that. But it's not only these tools and the data, of course, there's also improvements that you can make in your governance, your policies, the training or the awareness that you create in the organization. So that's a second element to it. And thirdly, it's also about collaboration with other parties. So we collaborate a lot in different countries, I should say, with banks, but also by the official sector, including the central banks, the ministries of justice and finance, the FIUs, the police, or the fiscal intelligence service agencies, because we strongly believe that by better collaboration we can become much more effective in countering and combating financial crime. It should, by the way, not stop at the border, at the geographical border, because that's also not where criminals stop. And that's why we believe, and we have currently national collaborations, it's even much better to do that on a European, if not worldwide scale, and we're very lobbying hard for that. And we truly believe that that will help the entire society to get a lot better in combating financial crime.
Great. And if you look at the competitive landscape, digitalization is creating new business models with large platforms, notably the big tech companies. We have our own strategy to create a platform in our own right on retail banking. How realistic do you think it is in the long term to go up against the big mega platforms? And what is the platform strategy? What is the approach for wholesale banking?
Yeah. We have in ING, we use three types of platforms. First of all, we have platforms that is actually our own platform, whereby we improve the interaction that we have with our clients, and we do not do that by only with banking products. We also do that beyond banking, so putting other services on top of the direct banking services. Because if you now look at our digital clients and the interaction with our clients with digital, you also see that these clients that interact on other platforms also get a richer experience. So we need to provide that richer experience, that beyond banking experience as well. That's one. The second one is actually providing support to separate platforms. And we do that, for example, while developing an aggregation app with Yolt in the UK that we rolled out there and in other European countries as well. So we develop separate own platforms. And thirdly, you as a bank can also play on other people's or other organizations' platforms, including the ones of big techs. Now, all those platforms help to create a better client experience. It also creates opportunities to have more fees, and I said before that's important, especially in a low or negative interest rate environment. To name a few examples, we have a platform that's called Lendico, where we are providing lending online real-time to SMEs. We have a collaboration, I want to say, with AXA, that's an insurance company, so that we can provide digital insurance services on a platform real-time online to our clients. But as an example also of a platform that we have with one of the big techs, we work together with Amazon to provide lending services to the SMEs that come to the seller portal of Amazon in Germany. We're very pleased with that collaboration. So there you see different forms of collaborations, either through our own app or separate or with third parties to develop a richer experience for our clients. That's the way we compete.
And if you look at then, again, at the competitive environment, we're seeing a plethora of different types of competitors out there, the big techs, the fintechs, neobanks. You know, which of those competitors concern you the most? And what do we as ING need to do to stay in the game?
Well, what we do see is that the global techs and the fintechs and the neobanks, all the ones that you mentioned, they of course are looking at parts of our lucrative services, not all, but part. And that's in the space of payments with PSD2, that's in the space of foreign exchange, that's in the space of trade and various other parts. And obviously some of them, and there's a lot of them that came about in the last 5 to 10 years, many of them have not made it, but a few are quite successful in competing with banks in parts of the service offering. Now, PSD2, by the way, because that's relatively new, the take-up in that regard has not been so high as yet, but it's still early days. Banks have also not been sitting still, and for example, in the Netherlands, we are currently doing instant payments. That means that you can actually do payments within seconds rather than within hours or days. Or on a European scale, together with SWIFT, we're developing global payment services in the SWIFT environment, and now we can do payments on the European scale within hours rather than in days. So there you see also that the service level that banks are providing has been growing and has improving day by day and week by week. Now, it's not the only thing that or only element that customers look at when they look at choosing their suppliers. It's also a matter of trust and stability and good contacts and interaction with supervisors, and those elements is something that banks have much more than the other competitors. There's also a trust element in the end, whereby you can ask yourself the question, who do you trust the most? Do you trust fintechs the most, or these neobanks, or do you trust the banks? I strongly believe, and I can see that it's this trust with the banks. So there I think we have a very good advantage, especially in a regulated environment. Last but not least, but I think that's also important, you see with the new regulation and new open platforms and open banking that a number of competitors are entering this space and they get access to our data. Actually, they're not our data, these are our customers' data. And at the same point in time, they can use their own data as well that they get from customers. And we strongly advocate that there needs to be a level playing field. So, and I think also that is being seen by the different regulatory authorities, as well as the fact that customers should have an equal amount of protection regardless who uses that data. And what we see in our interaction with regulators that they have now come onto this, and that will be a third element of the discussion that we will have to be able to compete at a level playing field.
Now, what about innovation? I mean, ING has a strong reputation for innovation, both in terms of internal innovation and creativity within the company, as well as partnerships with various fintechs and collaboration through ING Labs. What lessons do you think others can learn from our experience, and how do you expect this to evolve under your leadership?
Well, first of all, innovation does not stand on its own. Innovation needs to be part of a focus on clients, on certain aspects of the business, and the results that you want to get with innovation. And I think that we have been very successful in creating a better customer experience, but also improving a number of our processes and products. Now, there are a few learnings, at least learnings that we had over the number of years that we have embarked on our innovation journey. And it starts first and foremost with being very clear about a process that you want to have in going through innovation. It's not an accident. You have to have a rigid process, what you want to focus on, what the priorities are, and that's the way that you steer the people. So you have clear value spaces and direction that you give to experimenting in innovation. The second thing is that you need to make sure that you give people room to develop. And that basically means that if you put it in the business as usual, you run the risk that it is cut short very quickly. And therefore what we have done is we have ring-fenced it from the normal business, and therefore it has been given time to grow and develop. You need to make sure that you allow people and also innovations to fail. So you have to have a process in which you continuously measure the progress on innovation, and if it has not made enough progress, you stop it. If it has, you let it continue to the next phase. And I think that last but not least, but that's separate from these three elements, you need to create the right mindset. And the way that we've done that is with a methodology. We call that PACE. It's just PACE for PACE. It doesn't have any meaning then or abbreviation. But in that PACE methodology, we stage gate. We first experiment, we then go to a problem fit, then we go to solution fit, and therefore there is a similar or same process that everybody can follow in going through innovation. I think all those elements have helped us in becoming quite successful on that front, and I intend to continue that.
So what are some examples of successful innovation that stand out to you?
Well, first of all, I think that if you look at our service offering to date, we look very much at primary customers. That's customers who have a current account with us and do also other business with us. And there we do see, because that number is growing, we have a growing NPS, and NPS tells us something about the satisfaction that clients have with us, that our apps, that some of them are award-winning, our digital financial planning tools are working very well in terms of the current environment with our clients. Now, on top of it, we also have a number of innovations that we talked about, and there are some fintech tools that we have developed. For example, Cobase. Cobase is a multi-bank platform in which corporate and large clients can aggregate their accounts and aggregate their business. We have TradeIX. TradeIX is a platform for trade finance based on blockchain. We have Comgo, and in Comgo clients can do their transactions on the blockchain technology, and that's delivering simplification but also more safety for our clients. And last but not least, we have Corp ID, and that is a tool in which our clients can provide our KYC information together with partners, making it more safe for them to transact, not with one bank but with many a bank at the same point in time. So we do it both internally and externally as well.
We started our conversation talking about COVID, and I just wanted to circle back to that to ask what kind of impact do you think this is going to have on our industry, especially in the long term?
Yeah, it's a very difficult question. I think that what you currently see, that COVID of course has an impact on households and corporates alike, in some industries to a deep extent, some industries clearly more than others. And it's very difficult to predict. We've seen people thinking about a V shape and then a W shape and an L shape or a swoosh shape in terms of recovery. So
nobody knows.
So well, I mean, that's very hard to predict the future. But it's clear that this is a hit, and it's a global hit, and it can take quite some time. We, of course, also are impacted as a bank. In ING, we've taken a significant amount of risk costs in the first half of the year, and we've seen it with many banks and organizations around the world. But it's also going beyond that. It's also a crisis, but also a pandemic that makes us to rethink a number of things. And what you could imagine is that this has an impact on the supply chains and the end-to-end supply chains in the world. How will they operate in the future? It also has a broad societal impact. Directly we see it with our customers, but also in the society that we operate in, but also the globe overall. So in terms of how we deal with society and the role, an increasing role that we need to play in society, is a second element that I would like to bring to bear. And then of course we have the digital element of it, which is what the conversation is all about today. Of course, we have seen an acceleration in digitalization. Typically with these big events, that's something that will then continue to happen. That's also what we believe will happen. and therefore increased focus on digitalization also going forward.
Well, that's good news for me. So thank you, Steven. Thank you for sharing your thoughts with us. And thank you also for sharing with the Sibos audience. And we really appreciate your time.
Thank you very much. Thank you.